So joining me now is Matt McLennan, First Eagle Global's Value Team Lead Manager. Matt, give me a sense of where you look when you look abroad for value right now. So much talk about the China conversation, but is that where you're looking?
Well, we look broadly across all markets. If you look at the global portfolio, roughly half of our equities are in the United States, but the other half are outside the United States. And that's across Asia, Europe, and Latin America. So we really do look broadly. And I think one of the things that is important to notice is that the U.S. equity market has been pricing a return to normal. Multiples went back to 20 times earnings. Implied volatility went down to the low teens as a percent. So risk perception had moderated. Trading breadth was wide. And we'd seen the reemergence of narrative stories like the AI story propelling stocks.
Yeah.
Meanwhile, outside the United States, we've seen quite a different picture. You referenced the Chinese equity market. It's been trading at only about 10 times its trailing peak level of earnings, so at about half the valuation. And markets like Japan that people had written off over the last couple of decades have really been quite firm and still only trade at mid-teens multiples of earnings. And I'll point out that we've seen some encouraging changes with respect to corporate governance in Japan. Dividend payout ratios are on the rise there.
That's fascinating. Let's go back to the domestic market for a second, though. One of your big holdings is Meta. I wonder what you think about the launch of Threads last night. So much attention in the general media, so much attention in the business media. A lot of us have been typing away furiously. I'm on there, as are a lot of folks here at CNBC. What do you think that does for Meta, that product? Is that going to move the bottom line for that company?
Well, Meta has an enormous amount of enterprise value. So expanding the reach of Instagram is not going to totally change the economics of the business, but it is an example of what I would call the concentricity optionality in a business like Meta, where you have a dominant network, you have the ability to layer upon additional services and monetize your existing platform over time. And while we have our worries about the United States equity market as a whole, our stock selection is really happening one security at a time. And we're looking for these kinds of situations where you have entrenched market share and some form of latency in the business long term. It's not so long ago, Meta was trading at less than half of its current valuation because people were worried about its spending trends. And so it shows you just how quickly sentiment can shift with respect to even a large and established name like this.
So does that mean buy Meta today, or does that mean sell it, given that these things are fickle and you have no idea whether Threads is going to be a success or a flop?
No, look, we are long-term shareholders at First Eagle. Our average holding period is close to a decade, and we feel that the company remains rationally valued here, and it has the opportunity for more growth ahead. And so, we're long-term holders of our investment here in Meta.
Yeah, I also want to ask you about the bond market. You say the U.S. bond market is sending more worrying signals. We heard some of this from Dom Chu at the top of the hour, but I wonder if you'd elaborate on that and explain what it is that you're seeing there that's worrying you.
Yeah, so, look, when I think about what the equity market's pricing, I think the fixed income market is sending very different signals. We have a deeply inverted yield curve, somewhat of an indicator of recession. Beyond that, we see spreads widening for corporate credits, and particular subsegments of the corporate credit market, say the CLO market, are essentially shut down. And so the bond market, on the one hand, is saying, inflation is set to return to normal. On the other hand, I think it's implying that the path to get there could be more challenging than the equity market is pricing at this point in time. And I think one of the things that potentially explains this tension between the equity market and the bond market is that everyone's very focused on monetary policy, but I think there hasn't been enough focus on fiscal policy. The budget deficit expanded from just under 4% of GDP last July to just under 8% of GDP. And so we've seen a massive fiscal expansion. And I think that raises the risk of longer-term stagflation risk if it's not addressed. And I think in some ways, the resilience that we've seen in the corporate sector may have some illusory fiscal nature to it. Boy,